Good evening. This is Ken Long at Tortoise Capital with the daily debriefing for January 23rd, 2018. Take a quick look inside the chat room. Take a look at some turbo trades by Sonal. She found a nice oscillation here in the owl, buying it in the pocket entry here. That's the P1. It didn't fail. Owl, nice capture at the edge of the dragon. Fractional loss on this one. That's a reasonable play. We have a Z3 breakdown right here. Beautiful collapse and a strike exit to cash the gift. She re-enters. It's a scratch. The bias is still down. She shorts the pocket, scratch. We now have an owl on the far side, and the MACD histogram line is hooking up, as we can see here. See, this is where it ended, outside the river. This is where it crosses the zero line. Long, cash. Shorts the pocket based on the long side failure and the short side bias you get from the MACD histogram. That's a beautiful scratch. And then on the long side, back to test the RL270 entry. Failure to fail twice. Emerging dragon, second position. Logical cash, beautifully played. Well done. Here's one from Daniel. MACD on McDonald's. We have a Z3 pinch around noon. Breakdown. This is a Z3PC, and that's where you have a Z3 pinch. It breaks down. It fails to fail further. Finds support above the RL270. You take a fractional loss, re-enter, and then two legs up, and a nice cash here. Potential pocket that he's observing here, and that would be correct. That would be a pocket entry with a higher low than this previous low. So you have a long bias, and then that was available. Here's a couple for me. Now, yesterday in the report review and the swing question answer period, we framed patterns in GE and XLU. That's worth looking at again. And these were both crushed on a long-term basis. Let's take a look at what those charts were on the daily. Now, what we saw yesterday on GE on a daily chart was like this 5DD, and we had been short, and then we covered this on, it was basically a gap down and then a buying day, and so we cashed that, and then we were postured for a resumption, a second day of momentum, getting back to the RL270. And so what we actually saw, while we're here, let's look at XLU. It was kind of the same. So XLU had the same short or cover was down in here on this doji day. I was moving out of the way so we could look at the daily on the intraday. And so this was a nice coverage. We talked about people wanting to buy yield on sale and play with the resumption to the 270. Second day of momentum up, we end up getting long right in here. So let's take a look at our two trade frames. This is the XLU. So this was yesterday's close. There was a little gap up. This is a frog box of 20 cents. It moves 20 cents off the bottom with a low, a higher low. The MACD histogram has us positive. A hybrid frog off the bottom, or even just a frog box in this case. So you get long at 50-30. 1, 2, 3 legs up and rolls over. And now the MACD histogram has come out, and before it crosses the zero line, you cash at 50.80. So that is a 50-cent move on a 20-cent risk, 2.5R on a turbo. And if you want to keep a piece of that, you now have a reasonable entry in utilities. GE is a similar thing. Gap up. This was the entry line yesterday. It gapped up 30 minutes or less in. MACD histogram is up. You have a hybrid frog of 18-cent move, a frog box move of 18 cents off the bottom. Buy it, get paid. We have a MACD histogram reverse cross up, still above the zero line, so we have a long bias. Buy it, put a stop here, ride it, and enjoy it. Could you take a second one in here? You could. You had a Z3 pinch in here and then an excursion. So when it clears this this height right here, there was another potential entry in. I didn't take it, but it was there. Then cash at the usual spot where it crosses the zero line, recrosses the zero line to the upside, so you re-enter. That's the basis of sanity. And get a nice orderly progression. What a nice stop loss that PSAR is. So a couple really nice trades in XLU and GE. Pretty happy with those. This is one from Georgina in the setting up a trade frame. She's in the advanced swing course, and she's posting some trade frames for comments. She's noticed a dragon hump on the daily and a resumption, a low, a higher low. This is the excursion to the upside. She's programming that as a potential. That's the excursion from here to here. You know, mirror image. So 131 is in range. Gets a nice entry inside here today. I just want you to notice the Z3 pinch, the breakdown, and then the stop reverse. You get an owl entry in here that's just beautiful. So good work from Georgina. This is one from Daniel, doing a daily and Z3 pinch, buys the breakout. He's getting an entry around 57 and a quarter, so he's 75 cents into the good on, looks like about a 50-cent risk. So an R in hand, and off we go. And it can get this kind of move. Very nice. Well done. This is just a beautiful chart from Bob. His color combinations are just so, this is like art. I just find it so compelling, the color combinations. See, just some things just to notice as you work through patterns. Z3 pinch, breakout, crossing the zero line. So this was available. This would be an exit and then a pocket reentry when it recrosses back here. This is a rollover. You get a short bias right here, and you ride that from 1875 down to 1575. That's a 15% move in GE. That's that move that we have just taken to the other side, right? And I want you to notice the 2-hour chart is either a very slow intraday trade or it's a fast swing trade. And then we have this nice confluence of the end of this run and starting to cross to the upside. And that's what this supported the, this is what that move in GE that we were trading on 1 minute, that's what it looks like on 2-hour bars. So there's another follow through inside here that's available. Oh, in fact, that's the one where we ended up getting long. So when you framed it on 2 hours, the same entry you get for the hybrid frog is what you get in on the 2-hour chart. Excuse me. Yeah, we've already seen Sinals. We'll cover the daily chart real quick. So this is the daily for the trading day of January 24th. Oops. Still bullish volatile, still well overbought. Risk Z is still favoring shorter term trading, although the fact that this is slowing down and starting to roll up very soon we could be in a posture for some long side swings. No signals in channeling or overreaction. Still have GE, Boeing, Johnson & Johnson, AXP, and Merck as the 10-day max pains. Channeling, American Express, and channeling and overreaction, triple screen, and Johnson & Johnson. In the auto framework, GE is still well postured for the long side, and Boeing. BA has been so great. Let's see if maybe we can frame something for a trade that was it's been a winner. That's that long, strong move in Boeing. In our previous swing, now we're looking to stalk this rascal. I think that we have this opportunity right here. I think that's the reframing or the re-entry. If we get any kind of gains in that tomorrow, that's what I would look at. And if you put that stop down below the PSR, you wouldn't be wrong. That'd be about a $10 stop. I'd like about that's about $8. That's about $8 stop right there. I like that. GEAXP still firing. Now, this is that anomaly. You see, GE had been smashed on all previous time frames, and you get that one-day sharp reversal move. That's the kind of that one-day pop that you can earn some money intraday with the turbo to start paying for the long-term swing. If it's actually going to follow through and start recovering from this sell-off. Let's see. Boeing also at 3-1. That's pretty nice there because this is one that has been a relative strength leader. So Boeing, I really like that little trade. In the ETFs, nothing tests out well. Lots of frog numbers that are starting to work. Pinch and stretch, we have Pfizer and XIV. XIV is postured to go. It has failed to fail further. And if we get any kind of bump in the S&P, so the S&P is just still continuing to rock, I have to think that that bodes well for XIV. We're still long this one, but it has had less follow through lately than the S&P. I still like this, and if it gets above 150, then it's free and clear. Our old friend Wynn gave us a gap up, an excursion beyond 200, then a sell-off. Haven't hit our stop yet. If I'd been more agile, maybe I could have grabbed some of that, but I still like this. So Pfizer, let's see what Pfizer looks like on the super pinch. All right, so the super pinch occurs for two reasons on the daily. First, the width of the river, that 30-period standard deviation of range, is small, and there is a minimum of spread of the 4 RLs, the 10, 30, 90, and 270. They all have to be within plus or minus 4 SDs of the 30-period band. When I started using Z3 as the pinch box, it was just too hard to find enough good candidates, and there were opportunities that were missed. So I widened that to a Z4 pinch for dailies for the super pinch, and that seems to give us enough opportunities. I'll cover that in more detail on the next weekend Q&A. All right, so that's everything I want to cover now. We're 15 minutes in. Need to get you back to your regularly scheduled programs. Keep your wrist measured and your powder dry.